Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 28, NASDAQ off 27, S&Ps are off 4.5, gold contract down $13.10, traded at $1,184 an ounce. Silver down 2 cents at $16.15 an ounce. Platinum off 16 bucks at $1,189 an ounce. Pretty amazing. Platinum, folks, is only $6 more than gold right now, spot price. Copper up 3 pennies at $3.03 a pound. Light sweet crude flat, $74.58 a barrel. That baby's going to 70 bucks. Bonds, you got the 10-year down 8.6 at 126.12. 30-year off 16 at 141.06. King dollar up 146, trading out at 87.78. The euro is flat at 125, and the yen is trading up 111 at 117.97. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. If you didn't know that, bottom line, that today was Fed meeting minutes, you'd think that this is just a flat market, but we've had volatility out here, baby. S&Ps, not so much in the, well, it wasn't bad in the S&Ps. S&Ps, we've gone from 2040 to 2051. We're out there right now at 2046. If we take a look at the SPY, the correlation inside the SPY, this is what you have. SPY is down 65 cents. You've done 59 million shares. We'll see where this shakes out. 204.83, and we're at 204.90. Would indicate that, you know, it basically can't break topside. Market has every reason to break topside right now. Just about every news bit is out. Dow Industrials, we'll go through the Fed minutes in a second here. Dow Industrials, what we have with the Dow is this. Flat market in the Dow. You're down 28. That's a flat market, basically. Inside the Dow, what we have putting strength into it is that you have Walmart putting strength into it. Walmart's up $1.23. Coca-Cola is up 59 cents. Boeing is up 113, and Procter & Gamble is up 76 cents. Taking points away from the Dow Industrials today, we have Verizon down 84 cents. Marvell's down 48. Microsoft is off 62, and Intel is down 43. The composite, the NASDAQ composite. We go look at the composite, what we have with the composite. Composite right now is trading out down 28 bucks. We're at 4673. The NDX 100, the 3 Qs, if we take a look at the NDX 100, what you have, she's backing down. Really, it's sideways move. That's the reality. We're at 18 million, sideways move. We'll see if, in fact, the Qs close under 103.28. We're under that level right now. You close under that level, that'll be a small turn to the downside. Now, check this out. This is really cool, folks. Gold market. Let's go into gold. So what we had out here this morning, folks, is this. Is that intraday, I'll walk you through this, because this was as cool as you can get. And the move right now is about as cool as you can get. And this is what it is. So this morning in gold, gold's trading up at 11.98. And at, let's see, at 10.40, gold shoots down from 11.93 to 11.73. 20 bucks in a heartbeat. Now, what it was doing, which is so cool, so check it out. You came down, and as we were coming down, you came down with 17,900 contracts. That was going into the sign of strength from the 14th that had 25,000 contracts. It stopped it right in its tracks. I mean, stopped it dead. What does it do? What does gold do? Gold goes from being down $20 to being up $4. Okay, so now where we at right now? And this gets even better when you look at this right now. And this is positive for gold in a big way. So watch what's happening. Right now what we're doing is that we got up to the price point again of the 11.98. We're pulling back, and watch this. This is cool. So now we're pulling back. Let me see. Let's see. On the 10-minute we have, we're only 1 minute into it right now. The last, so check this out. This is sick. So the last 10-minute bar, we did 1,200 contracts going into 15,000 on the way up. What you have here is this. This is how gold makes a really sweet low, folks, okay? Because what it is this. So picture something. Last couple of years, gold's been going down. But the last 6 months, you know, we did that counter-trend bounce. We got to 1350. You come down off 1350, you get into 1138. You have a sign of strength. Well, actually, the one you want to get your head wrapped around first is this. October 6th, we make a low of 1183. We run topside to 1255. You come back down, you break those lows with conviction, by the way. What were you doing? You were coming into those 2008 lows in the XAU, the HUI. You have two separate signs of strength on the way up. Yesterday, get a little bit higher. And now what you've done today is you're coming into the sign of strength of the 14th, and you are rejecting lower price with lighter volume. Now, King Dollar. Let's go over to King Dollar, because what we have with King Dollar is this. King Dollar is just the opposite. King Dollar is up 100 ticks right now, but guess what? We have a spike lower. When the minutes come out, that's going to get tested. That spike low is pretty extraordinary at 87.36. Right now we're at 87.74. So with that saying, that's giving you a little more probability and confirmation that King Dollar has made its high. The high that we're talking about is 88.33. That was testing the high of 2010. So that's saying that, guess what, King Dollar wants to back down. At this Friday, the 87.24 is going to be the number. You close underneath that, that'll give you a higher probability confirmation that King Dollar actually made a bottom. Bond market. Let's go over to bonds. We take a look at bonds. So what we have with bonds is this. Bonds rejecting lower price with lighter volume. 10-year right now, 105,000, 1 million contracts, rather. The 1 million contracts are going into 1.6 million. Can't break it down. 30, that's your 10-year bond. 30-year bond, same setup. 30-year bond, we've done 309,000 contracts out here. That is going into 433,000 contracts. So you're talking large numbers, you're talking retracements, you're talking volatility. Now, the Fed policy minutes came out. Federal Reserve policymakers last month said they should be on the lookout for signs of a decline in expectations for inflation. Minutes said in their meeting. Many participants observed the committee should remain attentive to evidence of a possible downward shift in longer-term inflation expectations, according to the record on the October 28th and 29th Federal Open Market Committee meeting released today in D.C. Some of them noted that if such an outcome occurred, it would be even more worrisome if growth faltered. Bottom line is that rates aren't going up, folks. That's the bottom line. What's intriguing out here, and you can expect this volatility to continue, is that the market itself is having a hard time figuring out, okay, if the rates aren't going up and the Fed's going to basically continue being there, and now it's not that they're, well, what they are doing is this. It's not that they're buying more bonds. What they are doing is that the bonds that are expiring, they can turn those bonds over. Okay? So what you have here is a situation when we take a look at the S&P is that, okay, the news is out, status quo is in, well, not status quo, yeah, status quo basically is in, and the market can't move. You know, and it can't move up nor down. My take on this, it's based on this dollar. This dollar is going to be the number. It looks to me that basically the dollar wants to reverse in price. You reverse in price in the dollar, that's going to bring the market lower. In the commodity market out here today, natural gas, that thing's taken off to the moon. That's up 3.7%. You have cocoa up 0.9%. Corn, wheat, soybeans, they're all down. If we go over to the natural gas market and we take a look at it, because this cold spell that has come across the country is extraordinary. There's no doubt about it. It's only, November 19th. Natural gas out here today, 134,000 contracts, up 16 cents. This is a sweet little ABC structure on the way up. Natural gas is going to be going up to $5. Right now you're at $4.52. Our phone number is 877-927-6648. Dow Industrials right now down 28. Nasdaq's off 28. S&Ps are off 4.5. We'll be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials are flat. Nasdaq's off 22. S&P's also flat. Now, let's go over and we take a look at what is really intriguing, no doubt, is platinum versus gold right now, folks. And what you do have is that if you are in that market, it's not that you can find platinum coins real easy. But bottom line, if you are buying coins, buy platinum ones, because even with the premium that's baked in them, you get platinum running out here at $11.90, and you have gold out here at $11.98. That's very unusual when you have a situation that those things are so close. Normally, the platinum market is a couple $100 over the gold market. It's a lot harder to mine. It's a lot harder to get out of the rock, and there's a lot less of it. And then what you also have, of course, is that you have the aspect that platinum is used quite a bit versus gold. You know, it's used to take poison out of the air. So that's a number. If we go over to the XAU, the HUI, what you're going to see out here is that the gold, silver equity stocks, folks, they're pulling back. They're pulling back with lighter volume. It's a nice setup. And this is just what is really cool about this. And this is this is how these markets go. It's wicked. The scare that they can put in the markets in about 2 seconds is pretty amazing, particularly after the type of downdraft we've had. There's no doubt about it. You know, so we'll see where this shakes out, but in particular, I like what we see happening out here today. If we go look at an Eagle AEM, so we have an Eagle 3.4 million shares, and she won't back off. You know, it was down to 25.58 today, at 26.19 right now. So you're building cause. What you're actually doing is you're building cause to get through the $27 area. If we look at Wrangle Resources, GOLD, same setup in Wrangle. Wrangle got down to 67.20. You're at 68. You're basically going sideways, building cause. It looks to me like you're building a small B2C of some decent ABC structures on the way up. FNV, we go to Franco-Nevada. Franco-Nevada and Royal Gold, both of those folks, okay, have to do, well, they're in the royalty business. So the royalty business in particular, they get a percentage of the gross that is coming off the mines. And what you're going to have is this. Franco-Nevada came into its swing point yesterday and did 1.5 million. Your swing point had 1.3. That's about as good as you get. You're coming into the swing, you have an expansion of volume, you want to break the swing. That's the first part. Now watch the second part. This is where this is going to get cool. So if you own any of these stocks, what you want to start doing is putting them up on a weekly basis. It's only Wednesday. We got 2 more days to trade, right? But what you're going to see is that thus far, this has done 3.6 million shares. Well, it's coming in to 4.06. What that is saying is that it says it's not only going to have bigger volume, but it's going to have larger volume by about 18, 19%. That's what you're looking for when you're pushing into a swing point. That is saying you have an accumulation of buyers. That is saying that that wants to break that swing and go to higher price. We go to Royal Gold. Same setup in Royal. Royal actually took out its swing yesterday, 1.4 million, and it had 1.4 million. That's on the daily. On the weekly, what you're going to see, same setup on the weekly. Well, let's just see if it's going to be the same setup. So the weekly, we're dealing with 5 million shares, and we've done 3.2. So it's going to be close on the weekly. Right now, the way it's set up is that it would have the amount of shares that you need to go into that swing with higher price and volume and price spread and all of the above. If we go over to the euro, we take a look at the correlation inside the euro because, of course, if the dollar is going to do a counter-trend bounce and move into lower price, whether that's a natural retracement or, in fact, it's something deeper, the euro would be doing a bounce and going up into the 128 area. In fact, it could get as high as 130, 154. The euro right now is trading out at 125.43, and what that does is this. Inside 125.04, that puts it not in a high range, but it puts it in a higher range. That's what it does. So as we watch this market chop around, I expect you're going to see the currencies stay volatile, the commodities stay volatile. We'll see whether it gets to be any volatility inside the S&P itself. The S&P, for the volatility inside the currencies today and the commodity market, was really pretty flat. NASDAQ a little bit different. You know, well, let's see what's inside the NDX that's pushing this NDX around, because the NDX is having some tough time out here. Putting juice into the NDX, you had Dish Networks up $6.76. Staples is up $1.25. Garmin is up $2.43, and Charter Communications is up $3.51. Taking it away, you had Tesla down $10.52. Netflix is off that right? Yeah, Netflix is off 14.44. Green Mountain is down 3.37, and Yahoo is off 1.12. If we go over to Netflix and we take a look at Netflix, this is going to be intriguing because we did have Mark Cuban pumping this baby up in a huge way on CNBC. Bottom line, the way Netflix is set up, man, you know, we'll see whether he sold it. Netflix is set up for a very large ABC structure on the way down. Netflix came off its high of 489, went sideways, then gapped down from 450 to 331. Talk about a gap. Monster volume at the lows. Does a counter trend bounce to 395, and guess what's happening here? You're coming out and you're blowing out with volume on the way down. You're at what you have happening with Netflix also, by the way, folks, is this. Right now, you're at the high of the low bar. And the high of that low bar is 366.15. This looks to me like it'll probably end up at that low, and what you'll end up seeing is that you'll wake up tomorrow morning and have some nice sleep, and guess what? It's going to go after that low. So we'll see where this shakes out. What is intriguing is that not sure why it's getting hit today. You know, their ABC structure's on the way down. But in that context, I know Charter Communications, now so Charter right now, so let's go over to Charter for a second. Charter is up 343. And Charter themselves are having a huge conference out in Denver, I believe. And of course, Charter's trying to take over Time Warner, the whole ball of wax here. And Charter's nothing but a dead cat bounce. That's how this thing is set up. So Charter wants to get the lower price also. So, you know, it looks to me that what you're going to have is that Netflix wants lower, Charter wants lower. You know, we'll see where the whole baby shakes out. 877-927-6648. Let's go take a look at the XLF. The XLF yesterday, folks, you talk about anemic volume. You know, today it's got a little more volume in it. We're doing 19 million shares. Yesterday it only did 12 million. You know, so right now we're at 2409. We'd have to get back inside 2388 in order to get the lower price. The XLE, we take a look at the XLE. XLE sideways move. XLE is building cause to get down to that October 15th level. 877-927-6648. Dow is flat. Nasdaq's off 25. S&Ps are down 6. Small caps, so small caps still can't basically get a handle on price, higher price. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is flat. Nasdaq's down 23. You get the S&Ps off $1.50. Let's go to our man Jim in Minneapolis. Hey, Jim, what's going on?
Hey, Tom. Haven't talked to you in a while. How you doing, brother?
I'm doing great, man. How you been?
Well, you know, it's we kind of went into the polar plunge a week ago Sunday. It's like a light switch went on, and
I guess so, right?
Foot of snow, and it's cold, and actually it's 25 today, but it's just but it's
25. You must have your shorts on, man.
Yeah. Yeah, I'm gonna put my shorts on here shortly.
Oh my God.
Oh, it's just I always threaten I'm gonna come and buy something when we come down there every March, but man.
You got to do it, man. Market's taking off. Don't wait too long. You like that Sarasota area, and that's a beautiful area, man. So
Yeah. That's amazing. But I was going to get your take on silver wheating.
Let's take a look at it. I like it. I like it. I like how it's operating. SLW, folks. Silver Wheaton is the largest silver broker basically in the world. Low $16, the highs $27. And if you, it's really, when they developed this business, folks, okay, it was really intriguing because we actually had owned it, and they spun off Silver Wheaton. It was Wheaton, wasn't it? What, just called Wheaton, remember?
Wheaton, yeah.
Yeah. And then they made Silver Wheaton, I believe. But anyway, the bottom line is they have all of 20 employees, and they take in $655 million a year. So it's a brokerage deal. That's what it comes down to. Now, you're at 2057. You're pushing into that swing, and you're pushing into that swing with some decent volume, 20.75. It looks like, you know, I mean, this thing is 26.40. These things want to go up to that July 10th swing point. Let me put this on a weekly just for a second. So on a weekly, what we've done is this. Yeah, you're inside the range. See, what most of them did, folks, okay, which is really cool, is they got under their swing lows, had lighter volume, meaning that the 2008 swing lows. Now, did this make it? Let's see. No, this is even better. This didn't even make it down. Oh, my God. This is even better. So a couple of these did this. Okay, so check this out. Wheaton River. Thank you, Wheaton River. That's what it was. Yeah. Okay, Wheaton River. So 17.75, got underneath that, rejected it. Now you're basically moving up to the top of the range, and the top of the range on that is 29 bucks, man. You're at 20. So
yeah, I like I like the deal. I mean, you know, in the silver, that's the one I bought on this last, when they smacked them down. Was it last week or the week before when they really pounded them down?
And what you have, this is what is encouraging with Silver Wheaton, folks, is that the silver market itself, okay, has not got the traction that gold got. But yet, Silver Wheaton really started moving. And that's what you want to see, because what ends up happening is that when I look at the gold market, I really keep my eye on Royal Gold and Franco-Nevada in a big way, because their business plan is the same type of plan that Silver Wheaton has. It's different in the aspect that Franco-Nevada and Royal Gold are royalty companies, when Silver Wheaton is only a broker. But the bottom line is that when they are going higher, that is saying that the actual metal wants to go higher. You know?
Gotcha.
And we need some traction in the silver market. The silver market is what's lagging everything here. You know, if we go take a look at silver right now here, so we bring silver up, and what you have with silver is that, you know, we're at 16 bucks, and we need silver to get back inside 16.80. You know. We know silver, what happens with silver, folks, it's much more volatile anyway. I like what it did today. We've had 82,000 contracts today, and we got to a higher high. It hasn't held price, but we got to 16.53. Last high was 16.38. We had done 82,600 contracts there. We're going to do, well, we're already at 82,259, so we'll do around the same. That's the type of push higher that you want with that type of expansion of volume. So.
Gotcha. All right, Tom. Stay warm. I'll see you in March.
Okay, man. Have a great have a great one, man. Have a safe one. And yeah, there's no doubt, folks, that this cold vortex coming across the country is pretty amazing. And for all you folks up in Buffalo, New York, man, Dan from New York, man, that lake effect is just killing you. You better get down here. Maybe he's already down in Naples. Alibaba. So check this out, folks. Alibaba has been just slipping away. It's going to be interesting to see how this shakes out. When I just say slipping away, it's not that it's down a lot, but it ain't down 12 bucks off its high when the markets are still at highs. So you're at hit 119. Right now it's at 108. And, you know, you get an expansion of volume. So it looks that good old Alibaba wants to go to 106. We'll see whether it gets back inside 99. IBB. Now, this little baby here, this is the one you want to watch, folks, in an extraordinary way. Why? Because the biotechs themselves, you talk about highly volatile, they're amazing how volatile they are. But the way this is setting up today looks to me like the switch is going to get pulled again, meaning that this, it's a beautiful type of setup, meaning that it wants to go down into 257, and right now you're at 294. Zero volume today. You got over the highs of the last 6 or 7 days. Right now you're underneath them, and volume characteristic-wise, we're underneath them by about less than half the volume. And that, when you do that, your probability goes higher that it wants to get to lower price. So we'll see how this shakes out. We're 294. The first swing point would be 286. After that, you're dealing with this high volume swing low. If we go over to the highest, largest weighting inside the IBB, which is the biotech index, which, by the way, has been on fire for a couple years, GILD. Well, look at the GILDs. That's actually rejecting lower price in light of volume, so that doesn't want to crack just yet. CELG, we take a look at Celgene. Yeah, Celgene wants to come down. And as one of our tigers in the den was saying, that the Fed minutes go by with a yawn, and there's no doubt about that, man. It's pretty amazing, actually, that when these Fed minutes come out, that's exactly what it was, a yawn. You know, the bull and bear take out of that is that, okay, there's no conviction either way. Now, you're coming into Thanksgiving next week, and what does happen into Thanksgiving, most of the time, markets like to run in Thanksgiving. The one day that there's no doubt, if they want to run this market, will be the day after Thanksgiving. It's a half a day. That day after, that's one of the largest runs I've ever seen in the marketplace. I was right in front of a computer trading that run, going all the way up. We were just buying anything, and it ran. Check this out, though. This is when I'm talking strictly a day trade. That following Monday, forget it. That following Monday, they took the market apart. This is in the 90s. It was 94, 95, 96. I just never forget it because everyone was looking around, and we were in the same room. We're like, you got to be kidding me. Just buy this. Everything we were buying, I mean, that was that 90s mentality anyway. Everything he was buying, they were going up by 1 point, 2 points, 3 points, 4 points. And it was like, and it was, the market was open from 9:30 to 1. I remember we finished like, this is crazy. You know, by 12:30, we were basically cleaned up because we were too paranoid that this can't be real. And it wasn't real because on Monday morning, it took everything back. We might have went up a couple $100, and I think we went back 3 or 4. We probably went back 200 or 300 because we were dealing with a lot smaller numbers. But percentage-wise, it was a very large percentage coming back downtown. So what does happen when you get a slow day, and the day after Thanksgiving, no doubt, is a slow day in the marketplace, that's when you can run it. So we'll see how that little baby does shake out. We go take a look at the, let's go look at Walmart, because Walmart not only has broken out, but Walmart, WMT, yeah, she's, so she broke out, what, last week, $78. She's at 84.86 right now, and that's going to be a large ABC up. That's how this is going to shake out. She's going to have the volume. Weekly, she had the volume last week, so that's going to be 57. It's $20. Gives you a 91. A to B equals C to D is $91. And right now you're at 84. The Lowe's come out with numbers this morning. LOW. Low is up 360 right now. This is a major break topside. And what's intriguing here is that Home Depot is always the stronger one. And we'll see whether Lowe's is taking that whole baby over. It's possible they are. You know, big number. That's a nice expansion. If this is 24, 34, 44, 54, $28, 44, 54, 64, 74. Boy, $72. A to B equals C to D is 72, and it's at 62. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials are up 2 right now. Nasdaq's down 23. S&Ps are off $1.50. And you know what's going to be really interesting is that let's go through this case. This is going to be the government thus far has got one guilty verdict in mortgage-backed security cases. And now check this out, though. This is going to be interesting. So former Jefferies managing director Jesse Livek warned in an appeals court that his securities fraud conviction could be used to prosecute any business involved in simple negotiations, including car dealers, turning the government's declaration that his behavior was unfit for a used car lot on its head. He was found guilty in March of lying to customers about the price of mortgage-backed securities. Yesterday, they asked the U.S. Court of Appeals in Manhattan to throw out the conviction, saying it could be used to turn garden variety statements made in all kinds of negotiations into a basis for charges. Every car salesman who tells a customer that he cannot lower his price any further because he would earn only a minuscule profit on the sale, as it is, would be guilty of fraud, Lifka's lawyer said in the filing. Lifka said U.S. District Court Judge Janet Hall in New Haven, Connecticut, gave deficient jury instructions and excluded evidence central to the defense. The flaws inherent in the government's theory of the case that led to his conviction, the first connected with a U.S. program that used bailout funds to spur investment in mortgage-backed securities. So this guy was accused of defrauding investors of $2 million by misrepresenting how much sellers were asking for the securities, or what customers would pay, and keeping the difference for Jefferies. You know, I tell you, it's pretty amazing, folks. You know, when you read the top of that statement, I can see exactly what this guy is saying. So the main reason of reading this whole statement also is that you better make sure that when you get questioned, or if you get questioned by any law enforcement official, guess what? Don't answer any questions. Remember something, you never have to answer a question. No one has the right to ask you a question, period, okay? And in this particular case, when I'm reading this over, you know, it's like, you know, what are you talking about here? Because that's one of the, Tiger's saying, brokers always get something in the middle. Everyone gets something in the middle, you know? So this is going to be intriguing to see if, in fact, if number one, was it that simple? Is the government saying that? The thing that's blowing my mind is that you're talking about billions of dollars that went south, and they're talking about $2 million here. You know, what's amazing, it's so typical of the aspect that when you have these monster frauds, that it's never the folks that basically should go down the tubes, okay? It's always someone at the low end of the totem pole that basically they're going to throw the dogs on and basically, you know, do them up, and do them up pretty good, you know. Where is it? Is it Reigns? The guy, there's so many guys out here that have billions of dollars that went south, okay? And guess what? Then they're almost untouchables. So we'll see where that whole baby does shake out, though. But there's no doubt that Franklin Reigns, thank you. Yeah, I mean, and they absolutely knew what they were doing then, meaning that you can use there's plenty of folks that were using the context that, oh, Fannie Mae, Freddie Mac, they had a mandate to do that. They certainly didn't have a mandate, folks, to buy liar loans. Everyone knew, okay, that liar loans were out there on an extraordinary basis. And that wasn't the first time it happened either. You know, depending on how long you've been around, the savings and loans fiasco, that's how that worked out too. It's always a little bit different, okay, and it's always the same thing. It's just what happens when these large frauds take place. This is what happens. This is, if you're young out here and you haven't gone through a cycle yet, keep this in mind, because this is really important. What happens is this, is that at the beginning of the cycle, the people that are doing know that, okay, we can't do this. It's wrong. But they do it anyway. Then what ends up happening, society in general thinks that it's okay because everyone's doing it. Don't do it, folks, because the bottom line is that you can go to the can. And if I've seen two of them that go down like that, meaning that actually socially you could talk with anyone during that time and say, oh, of course that's what I did, okay? When some people would realize that, yeah, you can go to the can for it, but I expect that, you know, probably 50 to 60% of the folks that did that probably didn't think they were doing something wrong. You know, and in that context, listen to this. This is a trip. When you talk about regulations that are inside the mortgage market still, it's pretty amazing what you actually can still do. We did a closing today, and inside the closing that we had done today, so watch this. Watch how this shook out. We had done this prior, but I made sure that the lender had actually put this in writing to us, okay, because we were selling the property. And what it was is that with an FHA or a VA loan, the FHA or the VA, they allow you to put the closing costs that it costs the client, meaning the person who's buying it, they can wrap that inside the loan. Well, what they also allow is this, and this is where you see the Lennars of the world and everyone of the world, cash back at closing, no money down. Well, it's legal to go like this. Watch how this goes. That let's say you're selling a property at $200,000 and you want $200,000. It's legal that you can basically buffer in another $205,000 or $207,000 and then give the client that back at closing, and it does two different things. What ends up happening, it ups the loan structure, as long as it appraises at that, it will up the loan structure, and then the client can still get the fees paid by FHA or VA and kick back into the loan. Because when I was signing the HUD statement today, I realized that, oh my God, this is amazing how this actually happened. Because I wanted to wrap my head around it, because if you are selling property or buying property, it's really important to understand what that rule is. Because what it does absolutely do is gives you an advantage in the marketplace. Because there's some buyers that don't understand you can do that. And then what ends up happening, you just say, well, make sure that your lender understands that. And the lenders themselves, meaning they want to push the property out. But I'll tell you, you know, the documents, the closing was today. But when this happened, which is about 4 weeks ago, I really got to understand how those big ads with Lennar, Horton, and all this, how that works. What those credits get done at the end, but those credits, the client that you're selling to, they get that money, you just funnel it back, and so they need less money on the way. In fact, it turns into a no money down deal. I'm glad you really love that, don't you? You stay right there, folks. We'll be coming right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. And all you folks across this great country of ours, stay warm, baby. It's a cold one out there. This quote's by James Gardner. Believe in yourself and everything you can be. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials flat, NASDAQ off 26, S&P's also flat. Gold contract down $15.60. Had some nice volatility in gold today, folks. Up at 1,200, down at 1170, back to 1193, closing out at 1181.50. I like what it's doing. Why? They tried to slam it down, couldn't handle it. It was going into the strength that was out there on Thursday. Down 15 bucks, enough scare in there to make it get into higher price. Platinum down 17 bucks. Platinum is only $7 more than gold right now, 11.88. If you are thinking of buying any gold coins, buy platinum coins if you can find them, folks. Bottom line, differential there is normally a couple $100. So if you're going to begin that market, that's the market that you want to be looking at right now. Oil. 74.43. Oil is on its way down to $70 level. Bottom line, you have wide price spread, you get volume, you get all of the above. That's going to save us a fortune. Particularly what it's going to save is the folks in the Northeast, out in the Midwest with your heating bills. Bonds, you have the 10-year down 8 ticks at 126.12. That's rejecting lower price, has lighter volume. 30-year, same deal, at 141.04. And the 30-year, 10 years at 126.12. They both want to run up into the October 15th swing highs. King dollar, up 90 cents at 87.73. The euro is up 8 at 125, and the yen's trading up $1.13 at 117.99. After the close out here, what you have is this. We had Salesforce.com. That closed at $61.02. That right now is trading at $58.30. Let's see what they say number-wise. Earnings per share, the estimate was 13 cents. They made 14 cents. Revenue, $1.29 billion. Let's see what it looks like when we're looking at this chart. So this is going to bring it back inside a lower level. Oh, it's never made the... Oh, this is interesting. So watch what this did. Oh, this is wild. So February of 2014, you had a high of 67, a low of 60. Has volume of 46 million. It got up and tested the bottoms of that and then gave it up. Now what are you going to do? That's a heavy consolidation. You're going to go after the high volume swing low. You get a high volume swing low of $53 to $48. That's the way that's set up right now. GMCR, we got Green Mountain. Green Mountain closed at 153. That is trading right now at 152, so no big deal there. Numbers on Green Mountain go like this. The estimate was 77 cents. This must be an adjusted estimate. They made 90 cents. That's pretty intense, but that has to be adjusted. The sales estimate was $1.16 billion. They took in $1.2 billion. Let me just see this. You know, it's amazing, depending on how long you've been listening to TFNN. If you remember, when they first came out with the core rigs, CEO was on. They gave us, remember we were giving them all away? I think they gave us like 40 or 50 of them. And so their expansion, check this out, just from 2010 to 2014, man, everyone must be drinking this coffee. So 2010, they took in $1.4 billion. This year, they're going to take in $4.7 billion. Who knows when they started? Because I think that when we were dealing with them, it was right when they came out. I think it was probably 10, 12 years ago. Pretty amazing. 877-927-6648. Let's take a look at the S&P. What did the S&P do out here today? Flat market. You had the Fed minutes come out. Bottom line, no conviction on the way up, no conviction on the way down. We take a look at the SPY. And without this conviction, folks, coming into the Thanksgiving week, I expect, you know, the currencies are volatile right now. The commodities are volatile. The S&P is just still hung here. Long you stay at the highs, though, that's when you can break topside, no doubt. We've been hanging at these for quite a while. In August, rather, we hung at the 200 level just about all month. Then in October, we get down to 181. This is the SPY. We've been hanging at this 204, 205 number for quite a while. Dow Industrials inside the Dow. What you have with the Dow? There she is. Dow is a flat market out here today. Putting juice into it was Coke, Walmart, Procter & Gamble, and CVX. Taking it out was Verizon, United Health, Intel, and Microsoft. The indice that you still want to keep your eye on is the small caps. The small caps out here today, Russell 2000, not only went down, but you went down, you got an expansion of volume. We did 37 million shares. If we look at the IWM, goes from 116.25 to 115.15. You know, and the small caps haven't been able to get to their highs. They're the only indice that has not been able to get to their highs. Now, let's go over to the transports, which we don't look at a lot when we're on the air. If we take a look at the transports are at 9,012. Now, this is no doubt is a monster high, not just a high. We put this on a weekly basis, and you're going to see that it's been a one-way shot all the way up. What you do have, and when I say a one-way shot, you're talking almost, you are talking a double just from 2012. In 2012, November of 2012, we're at 5,000. You're at 9,000 right now. And it's getting anemic up here. So this one's going to get really wild watching it shake out. When I say anemic, if you want to see, so you had a swing high up here from the 19th. This is the week. This is a weekly. So the week of September 19th hit a high with 79 million shares. Then when we came down in October, you come down with 130 million. We went back up, and as we got into that high, we had 82 million, so that's not bad versus 92. Then we did 64 million, and thus far this week we're doing 26 million. That's saying the transports are going to need more juice, but that's a one-way move, and that one-way move, no doubt, has been topside. Gold market. We go and take a look at gold. So what you had with gold out here today, you talk about wide price spread. We had it. 258,000 contracts, and what you're doing here is you're pushing into the swing highs with volume. That's the way this is set up. And that's a nice setup. It's particularly a nice setup with the fact that we've been so dramatically lower. When you basically looked up for 2 seconds out here today, gold was positive by $3 or $4, then negative by 20, and then within about an hour and a half, it turned positive once again. Williams-Sonoma. Williams-Sonoma closed at $69. It's trading at $73.56 right now. And, of course, we'll see where this number shakes out. That is a big number, there's no doubt. And that's going to fill up a gap when it gets smoked in August. So August was at 75. Gaps down to 65. Today you're at 69. Now it's gapping up into 74. Now, what's intriguing about this, let's look at these numbers, because Williams-Sonoma, folks, if you do like to cook, it's a nice place to get stuff, but the stuff is so expensive, it's insane. The place you want to get stuff, cooking stuff, folks, is that you want to wait until Macy's has sales. And you can get that kitchen stuff, pans and all that stuff, like 50, 60% off. That's the place. Either that or Home Goods. Home Goods always has pretty good deals, but just keep shopping there. Williams-Sonoma, I love the place. I love going in there, but it's so expensive that it's like insane. But what you can do is that you can get your good ideas there and then basically wait for a sale somewhere else. So Williams-Sonoma, the sales are up 8.7%. Their revenue is $1.1 billion. Earnings per share is 68 cents. And if we take a look at this, let's see, WSM. And we put this on a monthly. Oh, yeah, this has been a one-way trip all the way up. Yeah. See, this is interesting because on a monthly, it doesn't have that vicious downdraft with volume. This has $75. It's going to get tested. 877-927-6648. And folks, if you haven't test drove the Nadex platform yet, great time to do it. You can do it absolutely free. They'll put $25,000 of paper money into it. And as Jay is in the den saying, it was great trading gold out there today on the Nadex platform.
Gee, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Fed minutes come out at 2 o'clock, and the bottom line is that it was basically a non-event. What the Fed is worried about right now is that they're worried about that we are all thinking that the inflation that we're thinking that it's going to be deflation versus inflation. And that's worrying them because they want to get that inflation going up to 2%. What's going to be intriguing, no doubt, is that when we do look at the energy market, so picture the energy market out here today. You did have natural gas go up 4%. That's running out at 4.5. FOA, I expect that's going to be at 5. But the pure energy that we're using each and every day, when we're talking gasoline, wholesale gasoline right now, folks, is at 201. If we bring this up, this looks like it's an ABC structure down, and the structure that we're talking about on the way down is a $1.88, and a $1.88. Oh yeah, this could get even better. So let's do this right now. So watch how this is shaking out. This is pretty amazing. So the high volume swing, we're at 196. You got 244. Yeah, it's 40-cent A to B, which gets you, what is it, 30, 35. It gets you to 165. 165 unleaded is going to get you, bottom line, like $2 unleaded gas. That is a monster savings in a huge way. So that's in the gas market. Now watch we go to the crude oil market, and We want to look at that for the diesel. So, right, crude oil, yeah. So if we get over to the crude oil market, we're dealing with right now a 74 price point. That baby wants to get into about the 70 area, and what that is going to do, no doubt, is save huge amounts of money for all you folks in the Northeast or the Midwest that are, there she is, that are dealing with oil heat. You know, and oil heat is a huge number. You know, one of our tigers in the den, you know, Jay's talking about transport should go higher. Yeah, and there's no doubt that the savings that come across the tank for all of us, and transportation would even be more, is absolutely huge. I know just in filling up my own car, and I believe this will be everyone, is saving 25% on every fill-up, even from like 6 weeks ago. 25%. It's like, that's huge. You know, so, you know, now that is in the fuel market, and I expect, so in the food market, though, we know that, well, meat costs have gone up dramatically. Not necessarily all foods, but meat costs have, vegetables have, fruits have. I suspect when you take a look at that, though, if I go through a tank of gas, let's say a week, what ends up happening there is that even with the expansion of food prices, it would still be, I'd still be saving money, because you're saving, what, all of $25, $22 a week on gas. Food would have to go up pretty dramatically, you know, not for a family, but for, you know, one or two people, it would have to go up quite a bit in order to eat up that $25. So we'll see where it shakes out. And I'm not sure where a couple of people in the den are saying it's still $3.55 here. Where is that? Because what has happened in Florida is that high test premium is down to $3.23 now, which is, I mean, it dropped like a tank. Actually, I think I saw it last night at $3.19. Oh, heating oil. Okay, yeah, heating oil. It'll take a little bit more for heating oil to go down. $3 north of Boston. But what you do want to do, you want to line that up with the heating oil. There's no doubt about it. I remember when I was living in Boston, oh my God, those 250-gallon tanks is a big number. There's no doubt about that. 877-927-6648. Let's take a look at some of the high-volume stocks in this low-volume market of ours. You had Staples up $1.16. Cliffs Natural, CLF, don't touch that stock. It's in a monster ABC structure on the way down. It looks like they have big problems. That was down 204 today, trading out at $8.17. Yahoo is off $1.16. Target. Target looks like it's got some of its mojo back. That's up, it was up $5 today. Let's go take a look. So Target came out with numbers this morning. Wide price spread, accelerated volume, all of the above. Yeah, and you're coming into it with juice. That's how it has to do, okay? If you want to see a classic consolidation that actually is going to have some juice on the way in, it's going to be Target. We'll see whether it can handle it up at the highs. But what you do have thus far is this, is that is pushing into the highs. On a monthly basis, we have 89 million. You're going to 66, so it's much better than the last swing high, that's for sure. And you're over the $70. Let me pull this back a little bit more. There's no doubt, it looks to me, folks, that what you have had, and this is pretty intense because I'm still, basically, I am still a bear. But what has happened, no doubt, is that these retailers, the amount of folks that are out shopping is spectacular. In fact, I've never seen it so big. It seems like I've never seen it so big. And we're talking, all these stores are packed right now. Well, what's going to be interesting is this, is that if they're packed right now, is everyone going to be shopped out before Christmas and before the holidays and get all they want, and is that going to slow down? And more than likely, this is going to be the scenario, though, is that they'll end up buying more. You know, and that, of course, is going to have to do with the amount of cash that is out there that is expendable I expect what this is, too, it's not credit cash. It looks to me like it's folks that have had cash, they're using the cash, they've saved the cash, and we'll see whether they run out of cash. But there's no doubt these retailers are out there, and there is no doubt when you sit in lines over the weekend or whatever mall you're at, it's pretty amazing watching the amount of cash that goes through. And each and every one of these registers, I'm always asking people, especially at the registers, well, how's business? Last weekend when I was asking that, they were saying, we've never been so busy, never been so busy this early. And I had said to this one woman, I says, well, do you think it's going to stay like that? Are people coming early? And their experience and her experience, what it was, is that when that happens, when it does come early, folks end up buying more than they normally thought they were going to buy. So we'll see how this shakes out. But Target looks like it's going to be a winner out of that whole deal. No doubt. Walmart has already basically come out, did it in spades too. If we do go over to Cleveland Resources and take a look at what had happened with Cleveland Resources out here. So this is CLF. This is a mining and natural resource company. I believe that, yeah, it's iron ore. Okay, so it's iron ore. And iron ore basically is at lows, and some of these companies are going to have some big problems. That came down to now 29 million shares, and if it wants to go up to $7, this breaks $7, it's big problems. Yeah, it's already in big problems. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You had ExxonMobil trade up 74. Oxy was down 62. You had Walmart up $1.20. Honeywell was down 26. You had 3M off 46. Procter & Gamble was up 78. Let's go to Robert in Chicago. Hey, Robert, what's going on?
How are you?
You staying warm?
Yeah, it's pretty chilly here, but it's 30. It feels like 0.
Yeah, 30. Man, 30's warm for Chicago. You're all set.
It sure is.
What are we going to look at?
Well, you talk a little bit about retail, and I just want to ask you about Whole Foods Market, WFM.
Let's take a look. You got Whole Foods WFM. The low for the year is 36. The high is 59. They pay a 1% dividend. You had a gap higher last week. You had some juice behind it. Now, that's on the daily. When you bring this up, however, and you put this on a monthly, you know, this is a counter-trend bounce that can get to 50.83, but that's all it's doing. So Whole Foods had made a high at 65. This was October of 2013. Made the high with 48 million. We go from a price point of 65 down to 37, and we hit 200 million. Now you're coming back up, and you're doing that with 119. So that's not bad, but if you were going to buy it, I would wait for it to come back down into approximately $39 and see if it has heavier volume or lighter volume. Because if it has lighter volume, then you got a setup. Then it's building cause to try to break the $50 level. Right now, that's just a counter-trend bounce that very well could, the next leg could take it down to like 20 bucks, man. So.
Perfect. Thanks, Tom.
Okay, man. Have a great one. Have a safe one. And what I do have with Whole Foods, of course, folks, is that bottom line, great store, and of course, it's nicknamed Whole Paychecks because it is that expensive. But bottom line is that for food that you should be eating, you pay. It's expensive right now. That's sad but true, but there's no two ways about that. We go over, let's go take a look at the XLE. The XLE, one of the first sectors off the highs. XLE out here today, you get a sideways move. The XLE is traded at 86. You're down off those highs from 100. You have the high volume swing down there at 77. We put this, and we take this on a monthly, and it's like, you know what? You're inside the range. Once you get to lower price, you know, we'll see how this shakes out, meaning that how do you test this 77.51 area? But I expect that you are going to see that test down into those areas. Now, let's go back to the transports, because when we were talking to transports, no doubt transports are at highs. We're coming into the holiday season. FedEx, UPS, all the above. You know, you talk about natural equities that are going to do huge amounts of business. Well, let's start with FedEx. FedEx is at 171.68. If we take this and we put this on a monthly, you have juice. You know, on a monthly, look at this. This is a break top side. So on a monthly, this is already broken. Monthly had 119.34. So what, that's 70, that's 64, 74, 84. Oh, this is pretty intense. 84, 94, 96. This is and when this broke that whole consolidation, it broke with volume. That's saying FedEx wants to go to 196, and right now you're at 171. UPS, let's go take a look at UPS. UPS right now is trading out at 105.63. We put this on a monthly also. We'll bring this back. Let's see, so yeah, you still got action here. So this on a monthly, 89.37. So you got 52 on top of 90. That's $1.40. I see this. That's saying that UPS wants to go to $1.40. This is going to be intense watching this whole thing shake out. You pushed higher last month with volume. It hasn't been able to hold price this month, but it still has the juice behind it. It done 47 million. You know, when you just look at those two delivery aspects, it looks like, yeah, they want to go higher. Let's go over to Amazon, because Amazon's going to be filling a lot of orders. Now, Amazon can't get out of its way. Amazon's at 326. Amazon had made its high, I believe, in January of this past year. Yeah, it made its high, it came off its high. So Amazon was at a 406 high, comes off that high, in January gets down to 357, continues lower, and right now Amazon still has a high volume low at 284. So more than likely what we're going to see with Amazon is this, and I wouldn't be shorting Amazon just yet. The reason being is that you get a lot of press coming in, they're going to do a lot of business. Real key is going to be when they report, they're probably not going to make a lot of money. The short position on Amazon is only 2%. That's pretty wild, watching that whole baby shake out. Now, let's go over to good old Apple. We haven't looked at Apple for a while. So Apple's at 114.67. Over ties. We put this up because these are the companies that are going to report how are these sales coming in. And Apple's up on air. You know, there's no doubt Apple's up on air. When Apple takes a hit, folks, it's going to be a monster. And what you'll see, if you're in Apple, just make sure you protect yourself. What normally happens with an equity that is not only up, but this is up on air in an extraordinary way, you know, on a monthly basis, what normally happens with something like that, this comes out of nowhere and then ends up gapping down and doesn't let anyone out. That's kind of how these babies do shake out. So we'll see what the catalyst would be for that. Apple, no doubt, is getting into the payment business. And that payment business in itself could be huge. But, you know, we'll see how that does shake out. When we talk about the payment business in general, if we go over to, let's go over a couple of the banks. We'll start with J.P. Morgan. J.P. Morgan hasn't got out of its way. Now, that still wants to go to a lower price. These banking structures still want lower price, which is hard to believe when, in fact, the market is up at highs. J.P. Morgan has been trading at the same level going all the way back to July of 2013. We look at Bank of America, BAC. Bank of America is on its way downtown again. You know, Bank of America with $17.06. The high volume swing low is actually right next to it. So Bank of America might be the first one that's actually going to hit it. Bank of America, the top of the high volume swing low on the week of October 17th is $16.67. Now, this is going to be important to watch. Why? Because we have a high volume swing low in all the indices in all the sectors. And if you see the banking structure come down there first, and they only test the tops of the highs, no big deal. It takes, if it's a successful test, meaning lighter volume, gets away from price, then guess what? That's the test. You're going higher. That would be saying the S&P will come down there, but more than likely would get out of there. You come down, Bank of America comes down, and we see an expansion of volume, and you get into, meaning you get into that $16.67. Let's say you're trading to $16.20, $16 and a penny. That would be problematic because that would be saying, number one, you're going to go down to the low, which is $15.43, and we'll see whether we've got an expansion of volume as you got into that lower price point. If we go over to Citigroup, we take a look at Citigroup. Citigroup is hanging at its highs. You know, it does have that spike low at $50, and right now we're at $53. Thus far, it hasn't gone after it. Morgan Stanley, we take a look at Morgan Stanley. That's rounding out, and that hasn't been able to handle its highs. What Morgan Stanley actually did is it tested its September 19th high with lighter volume. The high had 29 million, and you get into the low of the high with 7. So Morgan Stanley's on its way down into this $32 area, and right now you're at $35.47. The amazing part about it, of course, is that you're down at those levels, and oh my God, I mean, the banking fees, they're making a fortune. A lot of that has to do with how much they are actually paying out in fines, though. Let's go to Larry in Dallas. Hey, Larry, what's going on?
Hey, Tom, how are you today?
I'm doing great. You having a good day?
Yeah, I am having a good day. I'm looking to take a position in platinum, okay, and I'm looking at 2 ETFs, PALL and PPLT, okay? Do you like one better than the other? They really don't have much volume.
Okay, so PPLT. Let's go to PPLT first because this is the platinum one. The other one's palladium, I believe. But if we take a look at the Platinum Trust, the low's 115, the high's 117. You just stay right there. Let's walk through these things. 877-927-6648. Dow Industrials finished down 2. NASDAQ off 26. S&P's off $1.50. We're coming right back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We're talking with Larry from Dallas, and we're talking about platinum and palladium. If we look at the PPLT first, which is platinum, you know, this is a tough one, man, because what you have is this, is that you do have a market that is almost non-liquid, you know, short volume. You're at the lows, and it's like, okay, so if you don't hold 114.50, bottom line is that, yeah, it can go a lot lower. If we go over to palladium, that's P-A-L-L. What you have there, no, P-A-L-L, yeah. What you do have there is that this seems like, let's put it this way, this is a better setup because it has more, not a huge amount of volume, but on palladium, you're at 74.26, and the buy would be like at 72.56. Yeah, what happens with the palladium one, this ETF structure that you give me, Larry, is that it's cleaner as to where you can buy it and where you can put the sell versus the platinum ETF structure.
Well, if you were going to buy a stock in platinum, okay, which direction would you go in? I don't know which one to pick up.
Well, palladium is not platinum.
No, let's take palladium off the table. I'm going back to platinum. Okay, is there one or two companies that I should look at?
So you have I got to think this through, because there's a platinum and palladium company in Montana. What is that? I used to follow that. Is it SL Stillwater? No, no, not PAL. That's a dog. SWC. Let me look at SWC. Stillwater Mining. Okay, so let's go look at Stillwater. Stillwater is trading at $12.93. Thanks, Z. Appreciate it, man. So Stillwater's trading at $12.93. They do business in Montana. Okay, and this has both platinum and palladium. Lows $10.57. Highs $19. Yeah. Here. Okay. So this is good.
Okay.
Let me pull this back.
Okay.
This is the one. This is the one. Yeah. And you'd be going, okay, so you're at $12.93. You put a stop under $11.81. Now the question is, what are you gunning for? 1 second.
Should be $17.80.
Well, hold it. I don't think this has had a sign of strength yet. So, you know what? No, you couldn't buy this, because this hasn't. See, what's intriguing here, now this has not had a sign of strength where some of the gold companies have and the silver companies have. This has not had a sign of strength, so you can't buy it, man. It's not worth it.
Okay, thanks, Tom.
Sorry,
Appreciate
man.
good info.
Okay,
Right.
have a great one.
Care.
Have a safe one. Let's go to Stan in Atlanta. Hey, Stan, what's going on?
Hey, Tom, thanks. Yeah, I'm looking at CIG. Looks like it's bottomed here like 3 times since 2006. Power company in Brazil. They're short on water in their lakes, so they're having to buy power. So they just got killed on earnings, even though their revenues are up. And they pay a 15% dividend. So just wondering what your take is on this. CIG.
Yeah, let's take a look. Now, I have the dividend right now at 8.11, but maybe that's wrong.
So I'm looking on FinBiz.
Okay, so let's take a look at it. So the low is 450, the high is 840. I think what you're running into here, Stan, is this, is that what's happening in Brazil right now is that these large, well, first off, technically I wouldn't buy it, because technically this thing wants to get down to 273. You get a high volume swing low of 2008 that hasn't got tested yet, and this came down with vicious volume. I think what you probably have is that this is a lot of, like Petrobras. Petrobras is involved right now in PTR, and a huge amount of payoffs, huge amount of fraud, all of the above, people basically working inside the company, taking the company off. And you know what? CIG might be the same, man. You know, it might be a bureaucracy type of scandal that is going to go into a lot of those large companies in Brazil. That's, you know, because I can tell you what does happen is this, folks. If you've been to any of the money shows, right, what you'll see is that when they set up at the money show, Brazil has their own 7 huge booths, and these people all have one representative that represents all of them, because I've tried to sell them advertising a dozen times, right? And it's intriguing because I'm saying to myself, all I have to do is get into one of them. And I've never got into one of them, by the way, okay? But they're nice people. They'll sit down with me and talk to me an hour and a half, and then I go to the next one. And then I realized that what ended up happening is that it's one person that is bringing them over here, in charge of them. Not in charge of them, but when I saw Petrobras, what happened with Petrobras, I'm saying to myself, it's interesting. Those other companies, you know, they're not interconnected, but you get the gist of it. You know, is there that much hanky-panky going on in Brazil, and it's taking all these companies downtown? Do you know what I'm saying?
Yeah, but I'm seeing it bottom here like 3 or 4 times since 2006, and there's huge upside on this thing. So, you know, I made some good money trading it in the past, so I'm in it right now.
Okay.
I'm up on it about $700. So I'm just wondering.
That's good. I just keep a stop in, man. That's the bottom line. Just keep that stop in tight.
Okay.
Okay, man. Have a great one. Have a safe one. You know, if we go back to the platinum play, because I was saying earlier, folks, if you're going to be in that metal market, if you're going to buy something, buy platinum. And specifically, I just want to explain that. What I mean is this. If you're going to go buy gold right now, right, buy platinum, because what you have, and if you're buying coins, by the way, right, you shouldn't be buying coins just to trade them, okay? What you should be doing is you should be going in right now at 1182. Let's say 1182 is gold, 1188 is platinum. So gold, maybe you have to pay about $30, $35 for a premium for an eagle. Platinum, you're going to pay probably $50, okay? Then what I would be aiming for is this. I would be aiming for, on gold, about a sellout about $1450. Platinum, you'll probably get into $1550, $1600. That is a realistic assessment, folks. And your risk on each one of them is probably $50, $60 or something like this. Don't trade it. But if you're buying something like that and you want to keep it 7 months, 8 months a year, well, that's not that bad. You know, it's you're not. My take is that you're not going to get like what we got at the beginning. You're not going to go from $280 to $1,700, $1,800. That game is over, folks. What you will get in the platinum market, the gold market, I think you're going to get, you know, 1180, 15, 1550, 60, 1600. Fine. And the equities you will get, you know, are $26 to $50. The equities are different because you're taking more heat on the downside also. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.